We had another break to the downside there. And we had our last change of character here. We had our change of character to the upside, which signaled to us that we were about to have some buy movements in the market. Remember, the market would always do whatever it wants to do. No matter how clean or beautiful your analysis is, you cannot be able to predict every movement of the market. But you can follow whatever the market is currently doing at a particular point. So we had a change of character to the upside, and you can see that we created series of higher highs, higher lows here. We had a lot of spin created there. And eventually we had another change of character to the downside. There was another change of character to the downside. And that was our last area of break. That was literally our last area of break. The reason I said this was our last area of break is because after we had this break to the downside, you can see that market has been creating series of range structure. When I say range structure, we are just talking about those structures that are created outside our normal break without giving us a good pullback. Normally, if we're going to, be moving down, we should have something like a good pullback and markets coming down. But in this case, we just had markets broke this low to the downside. We had the break of this low. And after the break of this low, we did not get a good pullback. We were just having all of this. So they are just possible inducements or possible liquidity that markets would eventually come back to take. And you can see that they are in form of trend line. If you are familiar with what trend line is, you can see that they were just following a particular trend line. They were just, moving to the downside, creating series of liquidity. So even if there is anything we would be expecting from the market, we could just expect the market to come back into this area. This is what I mean. Market taking all of these highs, come back to this area and continue to the downside. That is what we'll be expecting. Whatever break we had to the upside here, whatever break we had to the upside is definitely not we concluding that we are in an uptrend. That's not going to be what we use in concluding that market is currently reacting to and see if it is a possible strong area of reaction. So we had this change of, and currently this is where market is reacting to a very good area of interest, our untested sponsored candle. But will that be able to hold market to continue a buy to the upside to take this high? Would that be enough to hold this buy to take this particular high? Definitely not for me. The reason is because we've had series of low broken to the downside here, a very visible low. In fact, we've had, even if we don't consider all of these lows being broken, you can see that markets broke a major here. There was a low broken here. We had this low broken, which is a major. When we talk about major, it's just those lows or highs that, has manipulated the previous low or has manipulated the previous high. So we had this low manipulated here. Sorry about that, guys. So we had this low manipulated here. We had this low manipulated. So even if we are not going to consider any of these lows being a break of structure or being broken to the downside, we should definitely consider this low being broken. Market has broken this low. So even if there's anything we're going to be looking out for, we just want market to give a pullback into this zone. We want the market to give a pullback inside. That's our sell continuation. And another thing you need to see is that markets made a great impulse to the downside. There was a great impulse to the downside. So if market is going to be buying, it's going to be a lesser percentage for me. It's going to be at a lesser percentage for me for market to buy to take this high, this particular high. It's going to be a lesser percentage for me. So it is possible to come back to and, make a continuation to the downside. On this particular asset, I made analysis yesterday, and my number one area of interest was this fair value gap that we had here. I was expecting the market will come back into this structure here or come back into this area, which we currently have. Some minutes, please. or come back into this, fair value gap, which market is currently reacting to. However, in as much as I am marking out this fair value gap, I definitely want to look at the right hand side, because there's nothing the market cannot do. The market can decide to continue the buy movement. It can decide to continue the sell movements. I'm just going to work based on what the market is currently giving me. So I'm just going to go to my 4 hours time frame. And my last break of structure was to the upside on the 4 hours time frame. My last break of structure was to the upside, which was here. This was my last break of structure to the upside. And secondly, where I am going to be expecting market to take, even if we are going to sell, is this low. So minutes, let me mark this. This is an inducement. I was going to expect market to take this particular low if I am going to proceed to sell. That is going to give me a confirmation that this PO high that it is currently reacting to is a valid PO high. I always love to say a PO high is just a reaction zone until market gives otherwise, or until market gives a confirmation. So it is still a reaction zone for me. So what I did yesterday was that I marked out this last break of structure, and I was willing to continue the buy movement until market takes this low. Until market takes this particular low, I was willing to continue my buy movement, because obviously it is a very good zone of interest. It is a very good point of interest. So I marked this out as a point of interest, and this would be our aunt of liquidity. But currently, with the impulse this market is coming down with, we might probably break this low. We probably might break this low. I actually entered a buy section here. I entered a buy in the middle of the night. I took a first trade yesterday evening. It took me out of the market around here. And eventually, in the middle of the night, I just saw that movement and I entered a buy here. But when I noticed this movement to the downside, I exited at a very minimal profit. But currently, seeing the impulse the market is giving, seeing this particular impulse the market is giving, I would currently not be looking for a buy movement for now. What I am just going to be expecting is that markets would use this same impulse to break this low. That is what I'm going to be calmly waiting for. I would just wait for market to break this low. Remember, I said that I was looking for a buy movement around this area, which was this PO high that we had here. I was basically looking for a buy because it is a valid area of point of interest, but it hasn't really given a solid confirmation for that buy. So, but with the impulse the market is coming down with, I would be expecting that market breaks this low. And once it breaks this low, it is definitely going to be a swing for me. Once the market breaks this low, I'm just going to, be looking out for a continuation point of interest here. See the impulse we are having here currently. This impulse, when we have this impulse and we have this low broken, I would look forward to market coming back to the fair value gap that would be created here. Remember, fair value gap are always created when we have impulse. So I'm just going to be waiting for markets to come back to a fair value gap here and a PO high here and make a continuation to the downside. But that is going to be after market has broken this low. This is 4 hours time frame. Before the end of today, the market should actually show what it is going to look like. Okay, the market should actually give us what it is going to look like. And also, if you look at what the market is currently doing, it is giving an exhaustion phase. It is giving that we are exhausted. All this going back, forth, and all of this, it is giving that we are in an exhaustion state, especially to the fact that market is reacting at a good point of interest here. So if this low is no longer safe, if market breaks this particular low, which is going to be our major, it is actually our major for this pullback. This is a pullback, and this low would be a major for the pullback. So if that low is broken, this is where I would be expecting market to come back to take, so that, we can create a new lower low. Remember what I explained here. So this was our last break. So what we were expecting is just markets giving us a good pullback and a continuation entry to the downside. So if market breaks this low is not safe. I'm just going to be looking forward to a sell continuation. Basically, that is going to give me more validation that we are in a sell movement. But for now, The market is still inside that range, and until this low is broken, I'm not going to change my outlook to a sell until this low is broken, because it is going to be the validation that we need for that sell continuation. And when this low is broken, we will definitely see a continuation area. This particular candle is going to be our interest candle. This candle created here, it is going to be our interest candle for that continuation if market breaks this low. So that's my view on volatility 10 for now. Just expect market to break this low. Once this low is broken, this particular low is not safe. It is not safe. I mean, market will do what it wants to do eventually, but according to my strategy, this particular low is not safe. Once this low is broken, we'll just look for a sell continuation to take out this low. So let's look for the second asset that we are going to be looking at. So we had somebody mention volatility 100 and we have somebody mention volatility 50. So which should we go for, 100S or volatility 50? I need one more person to just drop a comment. Then we're going to go over the next outlook. 101S, okay? So we're going to be going through 101S right now. So let's go to 101S. Okay, I have 3 people already mentioned 101S. So that's going to be our next outlook. So this is 101S, and basically just from what the market is saying on the 24 hours time frame, we are definitely going to be selling. That's what we are looking out for. Now, this was our last major break of structure. This was where we had the last major break of structure. Remember what we said about range structure when we were analyzing volatility 10. When we were analyzing volatility 10, remember what we said about range structure? It is like those small structures created outside the real break of structure. This was our last real break of structure. And this eye could not give us that good pullback into our real break of structure. So this was like a range structure for us, right? This was like a range structure for us. I am recording this section, do not worry. So this was like a range structure for us, right? It didn't give us a good pullback back into this area. And this was where we had good pullback. That was the last area we had good pullback. So markets breaking this eye is just you saying we have a change of character for market to give a good pullback back into our real structure. Okay, so since this was the change of character, market is currently reacting for this sell. It is a very sweet area. In fact, it is a really amazing area because it was an untested zone. It was an untested zone that market is using. Okay, so this was our last candle. This was our last base candle. And okay, so since it's a good PO high, what's the confirmation that we have? The second confirmation that we have, since that is a good PO high, was where markets took out this low. So we had this low manipulated. We had the manipulation of this low. Then we have a break to the downside, okay? This is the change of character to the downside. And if you're looking at anything around here, you can see that market has not given a good pullback into this zone. So first, we are going to mark out the good pullback, or the point of interest here. We'll mark out the point of interest market is likely to come back into to give a good pullback. So we're going to mark it with a fair value gap. So we're going to mark this. Let's mark this. Okay, so this is our fair value gap. This is like the area where market could come back to when it starts giving a good pullback. However, we don't want to wait for all of this to happen, right? We don't necessarily have to wait for this to happen. I mean, markets will still do what it wants to do. That's the funny thing you need to know about the markets. And everything you're doing should be based on probability. If this does not happen, then this should happen, right? If you can fix your mind on probability, you will barely have any issue with the market. Even when you lose money, you will barely have any problem with the market. You will stop investing your school fees. You will stop investing your rent fee just to, make money from the market. It's an investment that you need spare money to put into. In case if you lose it, fine. If you don't lose it, absolutely. So we have our last break of structure to the downside there. We don't want to be waiting for market to come back all over to this place. We don't want to wait for that. So we'll mark out the current last break of structure. I mean, the present last break of structure. So where's our current last break of structure? And one thing you need to know is that until market takes this high, right? Until market takes this particular high, it's not possible for us to come back here. This is the high that we confirmed to us that marketing on. This is the range we'll be focusing on currently. Looking from this 24 hours time frame, you already see a fair value gap, a very large fair value gap. See what we had here. Remember, fair value gap are created in 3 candles, okay? So we have this and we have this. That's a pretty large fair value gap that market could come back to fill. It is just like what can drag back the market. Fair value gap is just like something that can drag back the market. Hence why I often use it when it comes to my PO high confirmation. I often use this fair value gap. In fact, if I don't see it on a time frame, I go higher or lower just to look for that tiny fair value gap that is possible to drag back the market. So this is a very large fair value gap. Let's go to our 4 hours time frame and see if there's a PO high we can possibly mark out. Good. So where is the PO high we could possibly mark out here? You can see that even on the 4 hours time frame, the fair value gap is really large. So what I am going to do is, this is going to be my inducement area. This particular high on the 4 hours time frame is going to be my inducement area. And what I just want to do is for market to come back to fill at least 50% of this fair value gap. So let's see the 50% of the fair value gap and see where the PO high falls into, okay? Because sometimes market will fill it up, come back to this sponsored candle of the market. The market will not have strength to go back to the sponsored candle. So I'm just going to be marking out the 50%. Let's see the 50%. Is this the 50? Yes, that's the 50%. That was accurate. So this is the 50% of the market, of the fair value gap rather. I'm going to delete those trend line I use in marking out my fair value gap. So this is my 50% of fair value gap. Is there any PO high supporting this fair value gap area? Yes, there is a PO high supporting it, but I don't really use that PO high. It's a breaker block, right, that is supporting it, but I'm not really going to use it because even if we're going to use a breaker block or not accurate with the fair value gap. So let's check the 2 hours time frame if there's any interest candle around that fair value gap area that we could possibly use. None. Okay, so what I'm just going to do is wait for market to come back into this area. Number one, market might not come back to this sponsored candle. And it might come back. Yeah, it might come back. Based on this impulse, I am not really expecting market to come back to that sponsored candle. So what I just want to use for this continuation or for the market continuation is this fair value gap. I just want to see market get to this fair value gap. Give me a confirmation like this. Let me show you. Once it gets above or around the 50%, I just want to see something like either this, then a break, then possibly a liquidity creation, just a little liquidity creation, then we continue from this area. But basically, I am expecting markets at this area. This is my only area where I am expecting market to come back into. All this movement to the downside, if I am going to be joining personally, I'm going to be very calculative. I'm not going to analyze it for you, but personally, if I'm going to be joining this particular movement to the downside, I'm going to be very calculative. That's when market breaks this low, because sometimes we use range structure continuation. Markets might not come back deep into this yet. We might have just a break to the downside. And the funny thing is that markets will come back, use a very small fair value gap here, and continue to the downside. I have my way around, jumping into the market and coming back when the market is going against or when the market is trying to move in the opposite direction. Not everybody has that kind of skill. So I'm not going to just be analyzing this area for you. So what we're just going to be waiting for is for market to get to this fair value gap. Once we get to this fair value gap, just let's get a confirmation and we'll continue to the downside. So for now, this is the only area I'm expecting back and possibly. Number one, it will still react at this fair value gap, no matter what. It will still react at this fair value gap. So if it's react, it might possibly react and, make an impulse continuation to break this high. If this high is broken, we are coming here. We are coming to this area. So for now, where we have our PO high, or where we are expecting market to come back into, is this our large impulse area. And that is just it. I hope you guys enjoyed today's live session. That's going to be all for this morning or for this afternoon. Any other outlook will be sent on the channel. So that's going to be all, guys. I hope you guys enjoyed the live session and you learned one or two. If you have a question, you can drop it in the comments or you can drop it in the chat box, and I'm just going to go over the question and we'll treat it. But we are done. If you want to leave, you can leave right now. But if you have a question, you can stay back and ask on the chat box. Have an amazing weekend ahead, guys.